Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Tesla report for Wednesday, November 27th, 2024. Before I jump into the charts, just want to let you know that on Tuesday, wickedstocks.com put out a stock pick on AstraZeneca. You might want to check out that pharmaceutical stock. It's on the precipice of a significant move. I'm not going to say which way, but you might want to check it out. You can see it for free by taking advantage of the wickedstocks.com 5-day free trial. Also, before I jump into Tesla, I want to remind you the Nasdaq 100, the triple Q, is testing significant long-term resistance, 5-year channel resistance that may contain buying through the first quarter of next year. And from here, we could fall back into the 430s. So this is a big area. And obviously, Tesla is a meaningful component of the Nasdaq 100. So there is going to be some degree of symmetry between the two. That's not to say that the Nasdaq would fall away and Tesla wouldn't rally. They could diverge. Tesla is that kind of stock. But just know that as long as the triple Q cannot close the week above 512.02, and it's right in that vicinity right now, it is highly susceptible to falling back to that 434.17 formation over the next several months. Now, as we're well aware, Tesla put out a weekly settlement above that 337.91 2-year channel top last week. So it is in a buy signal. Tesla is showing the likelihood for 414.49 over the next, by the end of January, I'd say, maybe sooner. That 500.46 structure considered a long objective, attainable, as we move into, I'd say, the middle of next year. It could be sooner. Certainly, if we were to close about 414.49 sooner than later, we could reach 500.46 within 2 to 3 months, where we could place an annual high. But all of that true above 337.91. Now, there is an early week, or not an early week sell signal. There is an intra-week sell signal if we close today below 335.20. So we slipped to support on Tuesday. And, we also did, of course, on Monday. It's been holding well. 338.68 daily chart, 337.91 weekly chart, and I'm throwing in 335.20 on the daily chart. This is almost a 2-week channel bottom, week and a half channel bottom that can contain, session weakness. And I would call this the slippage factor below 337.91. Now, if we break 335.20, 329.35 is likely today. That is nothing more than a 5/8 Fibonacci over the last 2 weeks from the low that was put out after that initial high against the more recent high from this week. So that could be it for the day, 329.35. But if we close today below 335.20, you may consider, I would exit a long position that was recently established in Tesla, because I think then on Friday we could unwind back to 311.79. And this is a 2-year channel bottom. We get a nice bounce here. On other circumstances, I might call this a 3-star weekly support. But given the fact that if we close today, Wednesday, below 335.20, and we skip Thursday, of course, because it's Thanksgiving, and then we just have 1 day left. If we close below 335.20, odds do favor 311.79 within a day or two. And so therefore, if we close today below 335.20, odds would actually favor a weekly settlement back below 337.91. And if that occurs, then I see the likelihood for the mid 270s to upper 280s, 276.14 to 287.44. So really, what am I saying here? I'm saying if we close below 335.20, I don't see a good reason to stay long Tesla. I think it's a wait and see. Let's see how Friday pans out. But if we close below 335.20, Friday is likely to continue south to 311.79, I'd say by Monday at the latest of next week. And under that scenario, of course, we would likely then close the week itself back below 337.91. That buy signal rejection by closing Friday back below 337.91 would, how should I put this, be considered a sign of at least near to midterm weakness. So if we do close Friday below 337.91, at the very least, exit your long positions for the time being. And for those of you who are accustomed to, adept at trading both sides of the market, you may consider playing the short side back into the mid 270s to upper 280s, that 276.14 to 287.14 region, then in reach by the end of the year, where we could bottom out through January, possibly into February, round back up again. That would be the idea. And now, of course, there is the possibility that if we close the week back below 337.91, that we could unwind all the way back. Do I have the chart? I don't think so. Yes, I do. All the way back into what is now the mid 230s and climbing. This is a new channel structure. And so I think this is also potentially in play. But on the way down, I think we can expect a healthy bounce, not here, a healthy bounce here at the 276.14 speed line. It really is the speed line that I consider the primary support level if we were to close below 337.91 on Friday, or if we were to close today, that is Wednesday, below 335.20, because odds then favor a rejection of that long-term sell signal. Until then, we don't have a failed buy signal. We don't have a buy signal rejection. We have a market that is merely easing back, testing long-term support. Very typical move technically for the market, 338.68 on the daily chart. And that is, of course, 337.91 on the weekly chart. And holding above that area will keep, as I say, 414.49 in reach by the end of January or sooner, 500.46 by later half of next year or perhaps sooner. If we're talking upside today, I do have 352.56. That is the high settlement price that was actually put out Friday of last week. That is the highest this market has settled since the move began. It can contain intraday, potentially daily buying pressures. If it's a wild day and we push early above 352.56, we just might reach 370.87 by the closing bell, where a daily high can be placed. But, 352.56 may well contain daily buying pressures too, with the presently reduced volatility that is consistent with, later last week. So it can contain intraday, possibly daily highs. If we push through 52.56, we've got a good low for the day. The market likely to continue higher into the afternoon, possibly yielding 370.87 by the closing bell, where a daily high can be placed. Closing above this trend line. I do have 384.29. I've been talking about it now for a while, but it's just an old high. I have it as a session containment level only. So if we pull away by later in the week, in other words, if we happen to get up into the low 370s or certainly close above 370.87, I see follow through buying. 384.29, just kind of a hesitation point. We could top out there next week, but really I think there is the possibility that by the end of December, we reach 414.49 if we can pull away from this 337.91 formation over the next couple of days. And I would say, how should I put this? I think closing above 352.56 is a sign of strength through the rest of the week. 370.87, if we close above that, it is a sign of strength into December activity. I think it's about as simple as that. Please click like, share, subscribe. Check out wickedstocks.com. Take advantage of that 5-day free trial. You'll be able to see our recent stock pick in AstraZeneca, also last week's in Mara and Affirm Holdings, also the daily triple Q, testing a big area right now. I'm going to leave it at that for Wednesday's daily Tesla report. I will be back tomorrow afternoon with Friday's Tesla. We skip Thursday, of course, for Thanksgiving. And by the way, may you have a happy Thanksgiving. I will talk to you soon.